Hello, everybody. Thank you for attending this special webinar. We're here to talk about our buy and pullback model portfolios and the strategies around that. It's a contrarian approach to investing. So first, let me go through some of our disclaimers here. As you know, this is going to be a presentation where I'm representing GeoInvesting, which is a company I co-founded in 2007. And MS Microcaps, a company I recently founded. We'll get into that later on. But by viewing this presentation, you agree that to the terms and conditions at MS Microcaps and GeoInvesting, we are not giving you investment advice today, just for educational purposes. And by viewing this presentation, you also agree to the terms. Whether you're viewing them live or recorded, you can view the terms and conditions at the websites of both these companies. So if we now if you're familiar with a contrarian, the word contrarian, or it means basically investing by avoiding the crowd or doing what the crowd's not doing. And if there's one common theme across a lot of legendary investors, it's that they all embody that theme: to basically hunt where no one else is hunting, kind of basically buy stocks when there's fear in the market. It's the hardest time to buy stocks, but it's one of the best approaches to really getting a lot of alpha out of the stock market. And we're going to show you now. I've been running this GeoInvesting for since 2007-8, and I've had a lot of data to kind of go back and look at what's worked, what hasn't worked in our strategy. And the one thing that's always worked to a T really is our contrarian strategy. And we're going to get into all of our strategies soon. So if you look at, for example, Benjamin Graham, he said an intelligent investor gets satisfaction from the thought that his operations are exactly opposite of those of the crowd. Buy when most people, including experts, are pessimistic, and sell when they are actively optimistic. Then you have bull markets are born in pessimism, grow on skepticism, mature in optimism, and die in euphoria. The time of maximum pessimism is the best time to buy, and the time of maximum optimism is the best time to sell. And that was the great John Templeton. And then, of course, we have the very short statement from Warren Buffett: be fearful when others are greedy, and be greedy when others are fearful. This is so true, and it's kind of what embodies what a contrarian investor does, or a strategy, because you can have a lot of different strategies. This can just be part of it. And we use the contrarian strategy to buy stocks that are going down for no reason, to basically supplement our longer term strategies, because the buy and pullback is a very nice short to mid-term strategy that can be applied to the portfolio. Now, what is our mission? How do we find these stocks? And I've been an investor for over 30 years, a full-time investor. I've run in Geo since 2007. And over time, I continue to build this journal of knowledge and refining my process. And I really try to think about what do we really do and what's worked. And when I started making a list about a year ago or so of everything we do, what works, what doesn't work. And this is what I kind of dialed it down to. We look for the highest quality companies out there, or those stocks we think are going to be high quality in the smaller cap, micro cap, and nano cap space. And we have this 10-point criteria that I've built over time. And I merged that with a growing multi-bagger checklist that we use. Now, multi-baggers are stocks that go up 100%, 200%, 300%. Peter Lynch coined that term. So we have this really tier one quality space we're building. It's what we do then, we try and find the best companies in that space to maybe invest in or build our model portfolios. And it's a constant influx. And we've built this database, and it's still growing. And it's really helped us kind of put a lot of these model portfolios to work. Sometimes the stocks will come in, sometimes they'll go out. But that's really our mission, finding the best quality stocks at the right time to capture alpha. We're trying to find growth inflection points or catalysts going on at a certain time. Now, what the buy and pullback really does, it basically tries to find these best companies in that space that we think are timely, that are falling for a particular reason, or maybe no particular reason. Here's our strategy buckets that we use. And And this is just a piece of it, and it's always growing also. But I really love this thing because it really shows that you can be you don't have to be just one type of investor. Have an arsenal of ways of making money in your toolbox. And as you see the box highlighted in red, this is one of the ones we use. Now, this is really our core holdings, we call it. The highest quality companies maybe that are just maybe value stock. Maybe they're not exciting. They could be exciting, but they're just really undervalued and high quality companies. And we can do a contrarian, is the buy and pull back. We even look at momentum stocks sometimes. So stocks are hitting highs, and we find out why they're hitting highs. As long as they're undervalued, they might be very good investments for us. And then GARP, growth at a reasonable price. We're trying to find stocks that are really not too overvalued or too undervalued. And that's time for another discussion. But as you can see, we have a lot of buckets here. So then, if you look at, we have special situation buckets, which are mergers and acquisitions, balance sheet restructuring, business model restructuring, activism, event-driven catalysts, and non-dilutive offerings. This is one of my favorite buckets here, which we'll talk about in another webinar, called long shots. These are misunderstood penny stocks trading under $1. Some of our best stocks are these really quality companies that you wouldn't think are quality, trading under $1, that we think are going to go over $1. And along with that, we do this portfolio protection. We're trying to avoid investing in fraud, link companies, and pump and dumps. But really, we're also trying to understand risk factors. Now, a lot of investors will look at risk factors as a way to avoid investing in a company, or basically reducing the valuations of what that company should be trading at. We look at it a different way. We look at it in terms of, okay, understanding risk, but understanding when those risks are going to be a little better, when they're going to risk profile of a company is going to improve. So, for example, if you look at customer concentration, maybe a company has 70% of its revenue coming from one or two customers. Well, if we see that declining over time from certain things that management's doing, we see that as a potential way to maybe start looking at the company. Because what happens when a company de-risks its valuation, multiples can go up. That's kind of like I don't want to call it contrarian approach, because it kind of mirrors what we're doing it is doing what the crowd isn't doing. We're trying to find out which riskier companies sometimes are going to get less risky. That's kind of, if we find that, and in a pullback situation, we even like it even more, because as the stock comes back up, you get a double whammy effect. Stock coming back up because it shouldn't have fallen, and it's actually getting less risky. So you get this really double whammy expansion and valuation multiple sometimes. And as you can see here, there's a lot of, this is only about 8 of them, of the risk factors, but, buying stocks out of bankruptcy or that are going to avoid bankruptcy, if we can, our analysis can help figure that out. Sometimes you'll see stocks fall because they got sued, or they lost a lawsuit or had to pay a settlement in litigation. But from my experience, when a stock falls on that, that's a great time to buy some of them, because that means the company can now concentrate on putting its money and focus into growing the company. So you'll see a better focused company, and they'll be able to, have a better outlook going forward. That's one of my favorites to do, is actually find these companies that settle a lawsuit, pay the fine, and move on. Executive turnover, we don't love that. So we try and find out, like, if there is executive turnover that's going on, if a new CEO has come in, that we really like a lot. Sometimes you'll see a company go down because the CEO left, but if a new CEO comes in that we like, that could be a reason maybe for us to buy it or add to a buy on pullback portfolio. Margin erosion, we want to look for a change. If you see a company that's been having a bad margins for a long time, and we see reasons for it's going to get better, license approvals, the contract expiration cycles, maybe you'll see a stock go down because the contract ended. But if we think the pipeline is going to come in and replenish those contracts soon, maybe a great time to buy. And of course, we have to look at stocks through the economic cycles and see how we can play that in a contrarian way. Now, we are tracking thousands of stocks, and many of them end up falling for no reason. And it could be, for example, a big investor just has to get out of a stock for some reason. Maybe they got a margin call. Maybe a mutual fund or a hedge fund is not allowed to invest in a small cap stock anymore. So you see them sell. That's one of my favorite ways to buy. Maybe sometimes you see a big shareholder just selling a bunch of stock at market, and the stock falls. We're flagging those all the time too. These are things that are unrelated to the fundamentals of the company. And sometimes you just have market volatility like we've had in the last few years. where the market decline just takes all stocks down sometimes for the wrong reasons. But one of our favorite things to do is around earnings season. Earnings season is what creates a lot of volatility in stocks. And we are just intensive on doing this. We are reading we built a tool for in-house, for example, which I'll talk about later, that basically picks up every press release and helps us use AI and other things to go through it. And we are basically just looking at every release and trying to find out. I find a great company, a great earnings report where the stock has fallen for no reason at all. And that gets us really excited. The next thing we really do then is we try and go and read the conference call transcripts of these companies to see if the conference call transcripts maybe add some value to our bullishness or maybe confirms pessimism. That's what we're trying to find out. And I'll give you a great example that this happened really in 2008 or the 2009 recession. So we come out of 2009 recession, and I owned the stock. It was a defense company, and the stock was about, I think, $10. They came out with earnings, and the earnings missed estimates. It went down to about $8.50, $7, and I said, okay, well, let me go on the conference call and figure out what's going on. They basically talked about a delayed contract on the conference call that was going to be moved into the next quarter, and they're going to make it all back up. We put an alert out to our members. We're not day traders here, but if we found a short-term opportunity, we do talk about it because it was already a company that we already like fundamentally for the long term. So we thought it'd be a great time to add to our core position. And by the end of the conference call, the stock already recouped all of its losses. That's kind of stuff we're doing. And we're doing that not just in conference calls, we're looking at SEC filings, everywhere these hidden, we call it informational arbitrage. And the whole part of being a contrarian investor works really good in the nano cap space because just most investors don't invest in that space or can't. And so you're just competing with a lot less people. So finding those opportunities is a lot easier too, which makes our job easier. So I want to just now get into a little bit about our buy and pullback portfolios. The cool thing about this is I can say we have a lot of data now. We've already opened and closed 10 buy and pullback portfolios. We call them BOPs. And if you look at the first one was launched in 2016. The average BOP portfolio is open for a little less than a year. On average, of the 10, average a 39% return by the time we open them and close them. The average peak return was 70%. And these usually will have 4 to 7 stocks in them, by the way, when we do these things. If you look at the returns compared to the SPY index, the S&P, we outperformed the S&P by 24%. I think that's pretty incredible. And it also just proves a BOP portfolio or a strategy or contrarian strategy in the nano cap, small cap, or microcap space works really well. Now, only one of the 10 portfolios ended up down at the end of the period. The BOP 10 lost 0.16% by the time it was closed. That was we were going through the 2021 into 2022 kind of influx that hurt it a little bit, but really at its peak it was still up nicely at 49.7%. I mean, we got the closing and timing wrong on that, but that was a tough time to really figure timing out then. And we're not market timers. A lot of what happened at that point was a lot of companies, we didn't know how inflation was going to affect some of the companies in the portfolio, and that caught us by surprise a little bit. And then you know what happened in the next 2 years here. But it still beat the S&P by 5.2%, even though we were down 0.16%. So let's look at some more stats. So if you look at the best one, which was our the longest duration portfolio, which was our BOP 3, it lasted 2 years and 5 months. The portfolio at the close, when we closed the portfolio out, it was 122.8%. The peak return was 166.1%. The SPY was up 42% in that time frame. So at the close, we beat the SPY by 76.2%. If you look at our shortest duration portfolio, which was about 4 months, that was a 16.9% at close, peak return of 36.1%. The SPY was 6.95%, the SPY, and it beat the index by 8.43% at close and 27.3% at the peak. Moving on. Now, if you look at, we recently launched our Buy On Pullback Portfolio 11, we'll call it the BOP, on September 25th. It had been a long time since we launched a BOP portfolio, and we just wanted to wait for the right time. We wanted it 2023 to 2022 to pass, 23 to pass, and kind of get an idea of where the sentiment was going. And we believe that this will be another webinar I'll do later, is why I think we're in a new bull market for GARP, or growth at a reasonable price value stocks. And I'm extremely confident about that. I have stats to prove it. And now we're ready to do this BOP thing. So now we are in a new economy, a new market where earnings matter. So you'll have a lot of volatility around earnings time. If companies miss by a little bit, they don't say the right thing, the stocks will fall. So this is a great time. So we love earnings reports, 4 times a year, trying to find these. So we decided to do a BOP 11 ahead of the third quarter earnings season, and it's already doing pretty good. The portfolio return right now is at 9.1%. The peak return was 21.6%. So you see there's a lot of volatility in the NL cap space, but we use that to our advantage. And during this time, the SPY is down 2%. So we're beating the SPY by 11% there. So we're really excited about this. And once we close the portfolio, as we're showing here, that the value of these portfolios, they still do well. Apparently, I didn't even know the stat was going to happen until my analyst last second said you should take a look at this. So we've closed all these portfolios out, and we're still tracking them. The average return of a closed portfolio is still 96.55%. Although only 3 of the 10 are down, and only 1 is down by more than 10%. The highest performer is tracking at 271% still. So this shows us that these previous portfolios were picking good stocks. And we're actually really proud of the fact that we're hunting from the right hunting ground here. It also confirms that, microcaps plus a contrarian approach, it can drive excess returns. Now, the reason some of you are here today is because you probably saw our emails recently, and we highlighted these stocks here, and I'm just going to go over in real time. This is happening right now. So these we're always continually adding to our BOP idea line to get ready for the next one coming out, or add to the current one maybe. And LWAY, Lifeway Foods, was an interesting example. Had great earnings a few days ago. The stock was down like $3 in one day to like $9.38. We didn't know why. They beat estimates. Our analysis looked really good. The stock is I think they produce like probiotic products, and now it's up over 50%. That's just a great example. We didn't know it was going to happen that fast, and we didn't buy it, unfortunately, because we wanted to do some more due diligence. But we're still sharing these ideas, even though we don't buy them. We're still sharing them with our network of investors and who we subscribe to GeoInvesting. So we're not just a stock picking firm; we're a research platform. So there's a lot of investors in our network that do their own research. Maybe they bought the stock themselves. I don't know. And I think a lot of our members appreciate that. So if you're that kind of subscriber, you would really benefit from the early due diligence we give you into some of our idea pipeline and our thought process. And this has happened the last few days. So in 2 days, it was up. I think it was up this morning too a little bit. Another one here was, we sent you 3 names actually, and this is the second one here, was a LifeVantage. This is a nutraceutical company. This was an interesting one. So the stock was trading at about $7 or $8 when we actually found it, and the stock went down recently on earnings, but mainly there was some activist involvement. So there's an activist, a couple of them, that wanted to gain some board seats on the company because they didn't think the company was growing and using its capital effectively to grow the company. But regardless, we saw value in the company. If you looked at the earnings per share estimates in 2024 and 25, we saw value, and we thought the stock would be worth maybe 10, $11 at some point. At $7, $8, we didn't find it attractive. So what happened was there was a proxy battle going on, which is when the current, the activists want to come in, they do a proxy vote with all the shareholders, put it to vote. They were trying to get board seats and oust some of the current board seats. Well, they lost. So investors who bought the stock based on this activist coming on board probably all sold the stock. So they're not selling it for fundamental reasons. They just don't want anything to do with the story anymore. So the stock got as low as $4.20, and now it's bouncing a little bit. It's up 12%. And we're still doing our analysis here. We haven't added it yet, but this is the kind of frame of mind we're thinking here. We want to dig into it. We maybe want to talk to the activist because we want to see what he thinks. Are they going to stay involved with the company? What's cool about this whole setup, because I've been doing this for 30 years, I know that one of the activists who wants to be on the board is a great operator. He's actually the CEO of one of our best performing stock in our current buy on pullback, number 11. It's a stock Fit for Life, FTLF. And he turned that company around and went from, I think, maybe $2 or $3 over his time frame to maybe I think it's $20 now or so. And I'm actually going to host a fireside chat with that CEO in a couple of weeks to learn. We do a lot of that, Geo. We bring the CEOs on, we interview them in front of our investors in real time and dig down into the story. So I might actually ask them about this company, see if they'll talk about it, see if we get a little bit inside baseball knowledge, if we should be maybe taking a look at this for a BOP portfolio. And then finally, we have here Core Molding Technology, CMT. They make molding products for maybe like in different applications, trucking, or now they're going into maybe more industrial applications in factories. So the stock had fallen pretty hard from 32% to $17.15 when they released Q3 numbers a couple of weeks ago. And part of it was based on the weak guidance they gave. And this stock had been a great performer. They were making a lot of earnings. Were pretty cheap on a PE basis. I think they were selling at a PE of less than like 15. And what happened here was they gave some comments about the strike. We all know about the auto strike going on. Is basically going to hurt some of their business because they do a lot of stuff in the transportation industry in terms of the moldings. But our thinking is, and once that strike gets resolved and everything works out there, that the stock maybe will rebound a little bit. And it's already up 8% too. So I think I've shown you here how you can, if you want, you can use a strategy yourself or with us, even to get some short-term returns. That's how we're tending to do it. And we're not even saying we predicted that these companies could do it this fast. And they might go back down again. But this shows you how it does work. And the legendary investors aren't wrong about trying to apply a contrarian strategy, which will be a lot harder to do in a big cap market or large cap market when you're competing with analysts and Wall Street analysts and institutionals who are going to get that information quicker than you and act quicker than us. This is the last one, the case of the year I will show you is SMLR. What's cool about it, so what we also do when we create a BOP portfolio, we're creating this wish list of other stocks that we might want to add. And this is one we knew. So it's a medical device company. It was one of our best multi-baggers in the past. We don't own the stock anymore, but it came on our radar in mid-August last. I think it was this year. And what happened was the company basically their medical device that's covered by Medicaid and Medicare, they changed the reimbursements on those. So this stock just got crushed, as you can see from the chart. What we wanted to do was we figured, okay, in August, we need to figure out how bad it's going to be. How is the company going to get really impacted badly by this insurance reimbursement? Well, it took us a little while, a few months to figure it out, but we figured, what? They have other revenue streams that are going to make up for this. We don't think the loss of revenue from the insurance changes might be as dramatic as the market thinks. And the stock, we added it to our watch list to be a potential BOP. I think it was on the 26th of September, or maybe 29th of September. They had great earnings, and the stock went up, 50% since then. Okay, we didn't know what was going to happen. Our fault was this. We wanted to wait for third quarter earnings to come out and see the value of some of the things we're talking about. And by waiting, it hurt us because the stock has been up 50% since then. So really, but still, it's really comforting to know that the strategy is working for the stocks we're putting in our BOP 11. It's also working for our watch list. So we just give a lot of value, I think, in terms of, if you're an investor that loves doing research, it doesn't just want to follow the BOP. We give you a lot of other things to look at and other ways to kind of empower your investing through the things we do here at Geo. And this, you probably received the email today at some point. I'd like you to go back and look at it and really urge you to click on the links in there. We gave you an article we wrote about SMLR a few months ago to show you how much due diligence we do in our process. Again, we're not just stock pickers here. We bring you into our research process, right into our research pit, and we really we want you to see what we're doing in real time. We don't wait. we bring either positive, negative throughout the whole process. And this is an example of how research that started, 5 months ago, culminated in the stock qualifying for a bot potentially, and then going up 50%. And by the way, I'm not cherry picking here. These are all the, these are kind of everything where, I sent you emails in the 3 stocks that we, a few days ago. So those stock symbols were all in there. I didn't know if they were going to go up or down before the webinar, but I didn't think they were going to move this much. But but it just shows that really trying to keep pounding the table how I love the strategy. So where do we find ideas? As I said earlier, we find high quality microcaps in our tier 1 space with a 10-point checklist. Combine it with a multi-bagger trade checklist to basically find out the best stocks, maybe to put in these portfolios at the right time. We also have other model portfolios besides the BOP. We have, and that I'll do another webinar on at some point. But that's depending on the type of stock it is, we put it in the different kind of portfolio and the theme it meets. So what I do now at MS microcaps is a little different than Geo. So Geo is more of a it was the first asset I launched back in 2007, where we have we do video interviews with management teams. I interview investors, the best investors in the space on fireside chats. I interview industry experts to help us become better investors and understand the stocks we're investing in. We also write research reports on selected stocks. And we would send out a morning email and a weekly email to keep you abreast of what's going on with us. It's our newsletter. But what I wanted to do with MS Microcaps was really start getting into a more of a building the universe, showing you the universe. On GeoInvesting, you don't see my whole universe of stocks I'm building. It's the I get Geo's idea generation comes from my analyst team at MS Microcaps. And I thought to start really, how can I bring that pipeline of research to you? So we created this Cliff Note product, which is all my Cliff Notes, my really short Cliff Notes. And I'm going to send you examples of that in the next few days, which gives you a kind of, inside baseball look at my research before even my reach Geo. It's all my Cliff Notes. I think there's about 75 there now over the last 18 months I built out. And it's very, very, very focused on finding GARP stocks that are meeting growth inflection points. And they're tier 1 companies. I didn't know what was going to happen when we started building this index. So there's 2 indexes. There's a passive index, which is the entire universe I'm building. I'm tracking those returns. And then I also take the best stocks from the passive index and put them in an active index and track those returns. So if you like to do research, this is a treasure trove of really, really, really great companies. And it's going to keep building and building. Right now at 75 companies. I can see this having hundreds of companies one day, which you can reference these notes and to see what's going on. But I do build portfolios from these notes, and I do share them with our members there too. And here, so you can look at this. So when you look at the returns of our quality microcap index, this is the bold, the passive one, which is just basically 75 companies, not touching them. I'm letting them go up and down, they can go to 0, whatever it is, by doing nothing. You're at 22% over these 75 or so stocks. It might be 72 or 73. By taking a little bit of effort to find the best companies and maybe make some portfolio moves, that portfolio, I think, is about 50 stocks, and that's generating alpha already over the passive, and that's a 26.8% return. When you look at the indexes over that time frame, the SPY, I think it's about 18 months, is only up 2.31%. NASDAQ over that time frame is 2.58%. Then there's these other, the Russell 2000 is down 10.9%. The Planet Microcap Index, which is another index out there, is down 51%. And the LD Micro is down 20.57%. The Planet Microcap and LD Microcap are probably the best microcap indexes to follow if you want to see what's going on in the nanocap space. The Russell 2000 it has small cap in there. It's not just the microcaps. We're investing in some really small companies. So I'm really excited how this is just, and our quality index is beating the indexes. the other indexes. And this is just going to get better. This is a new project, so it's just going to get better and better, I think, as I get tighter and tighter in the way we pick the stocks in that portfolios. So then we look at I want to talk about how you can get involved in this if you want to get involved in what we're doing here. Option one, you can basically get involved with the BOP portfolios if that's all you want. As many as we launch throughout the year. I can see us launching, maybe 2 to 4 of these a year, really around earnings time. And you're going to get also I'll give you all the current BOPs we're running right now, and even our past ones if you'd like to do some research on past stocks. We'll show we'll tell you when we add a stock to the portfolio, when we close a stock, and when we close the whole portfolio. We give price targets on the stocks in there so you know what we're expecting. We also give a price target or a return expectation of the entire portfolio. You also get a summary of why we added the stock to the model portfolio. Option two, if you want to just get the BOP portfolio plus everything GeoInvesting has to offer, that research platform which I described earlier. By the way, option one is $97. Option two is $477. That's all of our BOP portfolios. Option one, right? All of our other model portfolios, we have what we call our top 5 favorite. We have our run to ones, which are stocks under one we think are going to go over $1. You get all the research we generate on ideas, whether they're in the BOP or not in the BOP. So you'll see the pipeline I'm building, and you get that research too. And then all of our video content, which is management interviews, investor insights, and expert insights. And then finally, you can get the Geo, everything in Geo, plus our BOP, plus what I'm doing at MS microcaps, which is building that great research index, as well as some research tools that we're building right now. I'm really excited about this tool. It basically takes all press releases and puts them on one platform, and allows you to do researches and major research from the press release. We're treating the press release like a research platform, not just a press release. And it's really one touch, everything you want right there from the press release. You can go to different, you can look at financials, you can look at the chart, and you can do keyword searches and soon look at AI searches on it. And I'll be sending you more information on what these things look like too. So I don't want to go over today because it would be too long of a conversation. But then that product is $947, sorry. So you have option one is $97, and it's for a year. Option two, GeoInvesting plus the BOP, is $477. And then option three, Geo plus the BOP plus MS microcaps for $947. So that's where we're at. We think we got a lot of value for our subscribers. Been doing this for a long time, and I think just one BOP portfolio or a few stocks, and I think can easily pay for your subscription. And that's it. So if you have any questions, definitely reach out to me. My email is maj@msmicrocaps.com. That's the email to use. And I can do a one-on-one with you if you want to talk more about what we do at my companies to see if it's right fit, and go from there. So thanks for your time. I don't know if you have any questions, you can do that now. By the way, I didn't mean to say goodbye so fast. I'll keep that open for a few seconds here if you want to put it in chat or raise your hand. Well, thank you, and we'll talk to you soon. Have a great day.